presenter is Eqonex Limited. Before we begin, we have our standard disclaimers. 17B payment disclaimers can be found on our website. Various companies have paid for research and/or conference services. Additionally, there are various forward-looking statements being made, and investors should be aware of the risks in smaller capitalization equities. With that, I'll pass it over to Shane Edwards, the head of investment products at Eqonex Limited. Shane, the floor is yours.
Thank you. Good morning, everyone. My name is Shane Edwards. I'm head of investment products for Eqonex, and it's my pleasure taking some time to tell you all about our company today. We've been listed on NASDAQ for a little over 13 months. We listed at the back end of September in last year, which I think made us the first crypto company to be listed in North America on the NASDAQ at that time. Right, let me share my screen and let's dive right into the presentation. Okay, so we are the Eqonex Group. I mentioned we're listed on NASDAQ, and I'm going to tell you all about us. Our mission statement: providing access to crypto and digital assets for institutions and individuals at any level with the same degree of investor protection, regulatory oversight, and security they are accustomed to in traditional financial markets. Now, why this is particularly important in crypto, it doesn't often come with brand names that people are familiar with. So for example, if you're used to trading stocks on the New York Stock Exchange or the London Stock Exchange, they're not the kind of names people might find that have traditionally been associated in the crypto industry. And digital assets are very new to people, and often it's still an area where regulation is evolving. So we see ourselves as differentiated from other companies in the sense that we really try and embrace that trust and regulation that comes with a sustainable business model. Regulation is coming. Now, some of the early entrants into the crypto markets, as people are aware, operated from different and perhaps interesting jurisdictions, and perhaps even saw regulation as a burden to doing business. However, our view is that embracing regulation really is key to running a sustainable and successful business in the long run. It's also key to ensuring that consumers and users of your platform trust your business and see you as the partner of choice. So the graphic we've got on the left really talks about fitting a square peg into a round hole. Now, in crypto, there's some companies that have not wanted to embrace regulation because they saw it as slowing down their business model. And there's some other companies that try to embrace regulation, but the regulation isn't necessarily there and fully ready for digital assets yet, which makes it very important to work with regulators and try and build those foundations for what's going to be a long-term successful vision. On the panel on the right, we look at some of the regulators that we actively work with. We've got ISO there talking about the standard of quality controls that we employ in our business, the Monetary Authority of Singapore. We have a crypto exchange that I'm going to talk about in a few more slides, which is headquartered in Singapore. I talk about the FCA, the tough UK regulator. We were the first digital asset custodian to get approval from the UK FCA, which makes us truly unique in that space. And this is an incredibly important growth area because digital assets doesn't just mean crypto. Digital assets, you really need to think about how securities today, stocks and bonds, might be truly digitized in the future to trade as tokens, how people are going to transact those, and then of course how they're going to store them. So it's really important, we think, to have a solid and well-regulated digital asset custodian. A couple more regulators: BaFin, the German regulator. I'm actively working on exchange-traded products in Germany, which are going to be physically backed. That's quite different to the US, of course, where there's an exchange-traded fund which references the Bitcoin future, and the SEC has recently not shown support for an exchange-traded fund at this point that references the physical. It's important to note that other regulators in the world, like BaFin, the German regulator, we believe are embracing products which represent the physical, and we are allowed to deliver those products into Germany, which is a huge market for this type of investment. We talk a little bit here about our business and maybe how it contrasts to some well-known names in the States. Starting with Coinbase, of course, also NASDAQ listed after us, but a pretty impressive market cap, $89 billion. I'm sure it's not lost on anybody and gets plenty of press attention. Predominantly, they're focused on the US, and their major product is, of course, the spot market. So they trade on their exchange, they trade 24/7 and have a commercial ecosystem catering to a variety of different clients. We are the Eqonex Group, as I mentioned. We're listed on NASDAQ. Our ticker is Eqos. We have a much smaller market cap than Coinbase so far, but give us some time. Our market cap is currently about $220 million. Our core markets at this stage are focusing on Asia and Europe. We have staff across Asia and Europe. We have hubs in Hong Kong and Singapore. And in Europe, we have hubs in London, Switzerland, and increasingly in Germany, where we do a considerable amount of business. We have spot markets and derivative products, which differentiates us from Coinbase. We have a view that derivatives are going to be a key growth market in crypto. We operate a 24/7 platform, and it's a full ecosystem, which is what I'm going to talk about in future slides, and to me is a really, really key point and a major differentiator. Bakkt is a name that I guess people are increasingly familiar with given the recent listing that happened in the last month. They chose the NYSE as the venue, BKKT is the ticker, market cap a bit over $1 billion. In contrast to Coinbase, they focus on derivatives, which makes them interesting and a bit different. Their hours of operation are 6 p.m. through to 5 p.m. the following day, and they have a commercial ecosystem catering to a range of clients. So here you see, broad brush, 3 different businesses, all fully embracing digital assets and doing business in crypto, but with really quite different focuses and areas of specialization. Today, crypto derivative volumes are approximately 3 times spot. Okay, so in most markets in the world, we talk about spot and derivatives. In the stock market, we would talk about buying a share, of course, as a spot, and we talk about futures, calls, puts, all those sorts of things as the derivative. That's a similar story in crypto, except that in crypto, the volume of spot trading is 1/3 of the volume of the derivative trading. And derivatives in crypto really means things like perpetual futures and instruments so that clients can get leveraged exposure to crypto. That there's not yet a fully evolved ecosystem of calls, puts, and other risk management tools like structured products that would exist in more mature financial markets like stocks, commodities, or bonds. And therefore, if traditional financial markets are anything to go by, we see huge potential in developing a more mature derivatives market in the crypto business. Institutions want to maximize capital efficiency in the crypto sector. So it might be incredibly surprising for people to realize that there's well over 1,000 different crypto hedge funds out there. And like regular hedge funds, they're very interested in how they manage their capital, how they get margin, how they get leverage, how they get access to different products. And we think that area of the market is very underdeveloped today. And much like you'd find a prime finance desk in an investment bank, which would margin and offer access and leverage to clients, there's an opportunity in the crypto sphere to be a leading provider of that particular product. I'm going to turn on the left to some interesting research that Fidelity did, trying to better understand this space and map the sector. They've said that 71% of their survey plans to buy or invest in digital assets. That's probably not lost on anyone. It's a very hot sector that most people are looking to get exposure to. 90% expect to have allocations by 2026. That's pretty huge. That's up massively on where it is today. You know, retail have been very fast to embrace digital assets. Institutions less so. I think for investment banks and others, it often means there's a modification of their technology stack, and there's a learning curve, and there's work to be done with regulators. So there's a speed of adoption rate there that we haven't seen come close to maturity, but I personally have a lot of confidence that it will. And then there's a lot of traditional investors like pension funds, endowments, etc., which are starting to really notice the types of returns that you can make in crypto. And I'm not just talking about beta kind of returns, I'm also talking about alpha kind of returns. There's a lot of very interesting trading strategies in crypto because the market does have some inefficiencies and does have some opportunities to make money that are probably, in my opinion at least, more exciting than some of the alpha that you're going to try and find in stocks and bonds, which are extremely efficient, really competitive. I think there's some interesting alpha opportunities in crypto. So I expect to see more take up from traditional investment firms trying to capture alpha, trying to diversify their portfolios and getting involved in crypto. And 52% currently invest in digital assets, right? So we're not at the rate of mass adoption, particularly across institutions, but I have a lot of confidence that that's the trajectory we're heading in. So that to us gives an opportunity to create something called Eqonex Prime. Prime services are founded in investment banks. As I said, typically they're the go-to point for hedge funds inside an investment bank where they can get leverage, where they can get access, and where their margins and capital are maintained. And we think there's an opportunity to do that efficiently and be best in class providing that product. This illustrates the ecosystem that exists inside Eqonex. And to me, this was key. I had the pleasure of investing in the company early on. And one of the key attractions to me for the company was that it had this ecosystem. I can see how this ecosystem meets the needs of clients, and I can see how it creates a cohesive portfolio of capabilities so that clients come in for exposure to one of these things, but you're able to capture value through the different products and services that we offer internally to extract value through that value chain. So I'm going to talk a lot about the exchange. That's the flagship, that's on top. I mentioned that it's regulated in Singapore, where it principally operates. We're constantly expanding the product set, and I'll talk a little bit more about that. But so to be clear, Eqonex has a leading digital asset exchange. It's regulated, it's built to institutional grade standards, and we expect to continue seeing adoption and volume increases going forwards. On the left, we have a capital markets team, which, as I mentioned, really want to have a look at how traditional securities are going to become tokenized in the future to be truly digital native. And that's going to revolutionize the way potentially the financial industry operates, to become more efficient, and the way information gets traded and stored. Bletchley Park is the name of our asset management group. So we're a licensed asset manager that units run out of Switzerland. It's a fund of crypto hedge funds that's performing extremely well. It's up 100% year to date. But unlike the types of volatility and risk that you get in other crypto assets, I think the worst returning month of the year might be down about 4% so far this year. So we're able to create a diversified portfolio of different trading strategies to mitigate some of that volatility and drawdown risk, but still offer really attractive alpha. I think the fund was up 8.5% last month. This kind of product I expect to become increasingly popular with pension funds, high net wealth, maybe private banks, because they might not have the expertise to figure out themselves how to navigate the crypto markets. Just like, some regular folk don't have the expertise in terms of how to navigate the stock market. So what do? They entrust a fund manager who's hopefully an expert stock picker and can compose a portfolio for them. That's pretty similar in the crypto space. However, there's a lot of crypto funds out there. Due diligence is extremely important. So we take a lot of pride and a lot of analysis in the work we do trying to formulate that portfolio. And it gives investors a very interesting exposure to crypto markets that they probably couldn't get otherwise. We think that's a key solution. Down in the bottom left, exchange traded products. So I'm responsible for that business. Europe is a very key target market. There is accommodative regulations in a number of European jurisdictions. I mentioned Germany, which is a huge market here. We'll be launching a suite of products there very soon, so that clients can get access to products traded on the German exchange, which are physically backed by digital assets. And even beyond that, they can actually let us know if they would like delivery of those physical assets, and we could deliver it into their wallets. So that's kind of a step ahead of where the US market is at the moment, having engaged with futures-based products, but not yet engaged with spot-based products. The European regulators are recognizing that spot-based products have validity, and we're going to be moving forward with that business. On the top right, we have a product called Access. This is really a way to make clients' lives easier. We hear a lot of clients that naturally want exposure to a number of different exchanges to be able to access liquidity. And without having a common pipe that they can access those exchanges, hence the name Access, it really makes their life quite cumbersome. So we offer a simple solution to help clients manage their business and access a range of different trading venues via a convenient platform there. Eqonex borrowing and lending. Again, taking a concept from an investment bank, anyone that's used to working in an equities department is familiar with an equity borrow and lending desk where you can borrow stocks, where you can lend stocks, and you pay for that, obviously, to utilize those stocks so that you can short sell them or get leverage exposure to those stocks. It's eye-opening to see that that's very underdeveloped in the crypto world. So there's certainly groups of clients out there that want to get more leveraged exposure to crypto. Of course, that's one side of borrowing and lending. And then there's other clients who are sitting on portfolios of crypto assets, obviously hoping they go up over time, but not extracting yield from that holding. So they can use borrowing and lending in order to extract yield from assets that they'd like to sit on and have exposure to over the long time, which is great. And last but certainly not least, in the bottom right, we have DigiVault, our leading custody solution. I mentioned that that's UK regulated by the FCA. For the industry really to flourish, it's extremely important that digital assets can be safeguarded in well-maintained vaults with top standards of information security, and that's very much what DigiVault is all about. In my opinion, this ecosystem is extremely unique. If I take, for example, my exchange traded products business, which I mentioned I'm imminently launching and awaiting regulatory approval for very shortly, that business could function as a standalone business. There's competitors in the market that run it as a standalone business, but they then give away liquidity onto other exchanges and they give away business to other custodians. By working as part of an ecosystem, we can design a product like exchange traded product, which accesses liquidity on our exchange and which safely safeguards the assets within our vault. And we can bring that ecosystem to the market, which we believe is good for us. And we believe it's also good for our clients because we're obviously proud of the quality of products and services that we've built. Eqonex Prime delivers capital efficiency through key modules of the ecosystem for a full Prime services solution. So here we drill further into the Prime capability. We keep talking about this because we really think it's going to revolutionize the way the crypto industry operates and help bring it to that point of maturity so that it's comparable to the traditional financial infrastructure. The types of clients, as we said, is largely hedge funds. And don't underestimate how important hedge funds are. If you're working inside an investment bank, hedge funds constitute a huge amount of your volume because they're such active traders and they're very much courted for that reason as clients. So of course, hedge funds come in a few different shapes and sizes. Here we broadly dichotomize them as being crypto native. They're focused on crypto. And of course, everyone will see the headlines that a lot of the traditional hedge funds are starting to embrace crypto because the returns are too good to ignore, so they want to get involved. The Eqonex Prime solution seeks to cater to them, recognizing they might want to do algo trading, they want automated trading systems, they need borrowing and lending capability, they need trade reporting, they need custody reporting. We try and package all of those services so that we can be the vendor of choice to the hedge fund community, who we believe is still going to be responsible for a lot of crypto volumes. And we need to make ourselves attractive and relevant to them, understand their problems and provide solutions. Of course, on the right, the different types of things we can offer to them in addition to the access routes. We trade spot, we can trade derivatives, borrowing and lending capabilities, and of course, DigiVault, where we can safeguard their assets, is going to be very important indeed. I keep talking about the extent to which we embrace regulation. I think it's incredibly important. I think it's the key to sustainable long-term success, building good relationships with regulators, trying to work together to create a very much trusted platform to inspire the confidence of potential clients. This is, again, a broad brush representation of the types of regulators and types of endorsements we have around the world for how we govern our business. Obviously, looking at our own business, the decision to become listed on NASDAQ was clearly part of our goal toward transparency and governance. And you certainly wouldn't go and list your business on a stock exchange if they weren't values that you embraced. But we really think that is key to inspiring trust in us and trust in the industry as a whole to achieve sustainable growth. A bit more about the ecosystem. So I broadly described what the different businesses do from a high level, but I'm going to talk a little bit more about how it is that they generate revenue. Starting with the exchange, perhaps not surprisingly, of course, exchange generate commission-based revenues. So you can assume something like blended commissions, 2 to 4 basis points, trading liquidation fees, sub 40 basis points, OTC commissions. Of course, a lot of clients trade on a regular exchange. Some clients want access to OTC solutions designed specifically for them, and that normally comes at a higher price. So broad brush, they're the kind of ways that exchange generates revenue. Eqonex Capital, I mentioned, is going to be involved in the tokenization and digitization of traditional securities and can take an advice and distribution fee, somewhere between 1% and maybe up to 7% in that business, digitizing assets, which we really think is going to be a major global financial trend. Bletchley Park, our asset management unit, the fund of hedge funds charges a management fee of 1.5% and a performance fee of 15%. Obviously doing quite well this year given the robust performance, and for the reasons I set out before. I think really that the understanding and attraction of crypto hedge funds is only just starting to become known, and I'm personally very bullish on the outlook for that type of product being hugely relevant to traditional financial investors. The investment products business on the bottom left, we're going to charge a management fee for the types of products that we're going to list on exchanges. And we're also going to move into structured products. I've run various large structured products businesses in my life. And structured products is a huge revenue stream for investment banks, where the structures are linked to equities, credit, commodities, etc. typically. And there's a real gap in the market for structured products linked to crypto, where I think we can achieve fees of 2, 3, 4, 5%, because there's limited competition and the potential returns to investors are very attractive. So we're moving into that business as well. Access up in the top right. It's a thinner margin business because it's very volume driven, commission around 2 basis points. Again, the purpose of that business is really making life easy for clients, being able to get a cohesive solution to access multiple venues. Eqonex lending, spread and commission based business. So again, if a clients are lending out their coins, you can take a spread. If other clients want to borrow coins, we can charge a spread for the financing and being able to access that. So it's a spread and commission based business. And DigiVault, of course, there's a cost to safeguarding and safekeeping assets. Custody can run up to 40 basis points, and there's fees for withdrawing digital assets from cold storage or warm storage or different types of storage arrangements, depending on what investors want. So from a very high level, that's kind of the top level revenue generation model for each of the different sub-business units. The exchange has a very active roadmap. Crypto is changing all the time. There's always new and exciting opportunities and products we can bring to market. On the left, the current offering is a bit of a showcase of what we currently have on trading on the platform. And on the right is the future product roadmap, where we're going to focus a lot on derivatives because we believe the growth in that business. We're looking at doing daily fixes on BTC, USDC for a derivative settlement, dated futures contracts, attractive way for people to get leverage, also to trade arbitrage profit that exists quite often actually in the crypto markets, where futures and spot have very interesting relationships depending on how buoyant and how bullish the market is. We're going to focus a lot on options, add additional derivative pairs, and we're very interested in auctions as well, which we think is a step forward for the crypto market, so that investors have transparent, competitive auction fixing levels is going to really help the maturity of the business. Other offerings, we're focusing on a mobile application, which will be rolled out soon and will be key to increasing particularly retail client market share, given that everyone loves everything mobile these days. We are going to roll out a managed account solution for clients that are interested in things like the fund, but want a very specific and designer approach to how we can compose that fund to meet their specific requirements. We're going to add more coins. We're going to focus on fiat on-ramping. Fiat on-ramping for non-crypto people probably doesn't mean a huge amount, but it's still not as straightforward as one would like to be able to get traditional fiat regular money into the crypto ecosystem. So we aim to make that sort of part of the journey as easy as possible for clients, and focus on additional volatility products, which really aren't yet mature in the crypto landscape compared to what they are in traditional finance. And we think that is a big opportunity.
Shane, I just want to get to a couple of questions because I know we're running a little short on time. Maybe just one more minute and then we'll take some Q&A.
Sounds good. Well, in that case, let's do this one. I'll finish on this note and then we'll move right along. Eqonex is the first NASDAQ listed company to issue a utility token. So everyone's probably quite familiar with the different range of crypto and tokens that are out there. EQO is our token. It's novel. It offers utility value across our ecosystem. We designed it to reward the most active traders on our platform. And that led to a considerable increase in volume through our framework. Clients were quick to recognize the value that the token has within our ecosystem at unlocking value and price benefits across our different products and services. And it's been fantastically well received. So there's quite a bit I can keep going through. I guess one more slide maybe where we'll just have a look at the volume of our exchange. Our exchange today has turned over more than $200 million of volume. It's an actively used exchange. From the moment that it's launched, really it had very steady growth. At some point this year, of course, Bitcoin hit a high and came back a little bit. So volumes are of course market buoyancy dependent. et cetera, et cetera. But generally, we've been extremely impressed with the volume growth we've achieved across our business, and have a lot of confidence that there's a number of different things we can do moving forward. Some revenue forecasts, some actual revenue numbers, et cetera, for an early stage business. But I realize that I'm kind of running out of time, Hunter. So before you yank me off, maybe there's some of the questions I'm going to have to field anyway. So shall I hand back to you?
Exactly. Yeah, I think we had a few investor questions. So one was, when can you expect borrowing and lending to be open to individuals? I don't know if that's something you're going to be rolling out or can comment on.
Yeah, it's a great question. Look, so the borrowing and lending is up and running for high net worth individuals. We would manage those trades for them now if they want to get in touch, and we'll put something in place. I think the mission is to increase the scale of that over time and make it as efficient as possible. But it's very much up and running, and we can do transactions that are of the right size.
Okay, great. And the other question was the Eqo token. Someone wanted to know if it's like the BNB token going to be a buyback or kind of to grow the ecosystem. I don't know how much you can comment on that one.
Yep, that's a great question. So we published a white paper when we launched the token. We intend to support the token. There'll be buyback and burn mechanisms. It has finite supply. It's an asset that we want to be scarce. We want it to be in demand, and we'd love to see its price increase over time. So by all means, anyone that wants to know more about it, let me know. I can send you over the white paper that will give you all the technical details on how it operates, and we would love to see it succeed.
Great. And another investor wanted to know, I'm sorry, it's like a speed run here of questions, but Digivault assets under management. Someone wants to know, I don't know if that's public or you can even.
That's a good question. I have to defer to Christian for that one. It's growing at a pretty rapid rate, so I'm not even sure I have the answer off the top of my head. We've recently won a couple of really big mandates in that business, which are going to be potential game changers for the size of the assets under custody. Christian, what's our official line on that?
Yeah, at the moment, just because of the sensitivity of those disclosures, we don't disclose the AUC actually for custody at the moment, but we will be doing so when we report our second quarter earnings.
Yeah. All I can say on that business, look, I have a lot of traditional financial service type contacts. I think the vast majority of banks, insurance companies, et cetera, around the world are scrambling to figure out how they're going to be able to store and safeguard digital assets. Custody solutions like Digivault is the first one to receive UK FCA regulatory approval to operate. I think the outlook for those kind of businesses and services going forward are very, very, very exciting, and are going to become a fundamental part of the future financial infrastructure.
Absolutely. And just to summarize, my view on Eqonex or Eqonex Limited now has always been that, there's a lot of other plays you mentioned in the deck, Coinbase, there's other public ones that are, and there's not that many. There's MicroStrategy that, kind of hodls Bitcoin as a software company. My view has been, look, the valuations are kind of, very high in those businesses, right? So yes, you're getting companies that maybe, are very far along and have, high revenue, but you're getting a very small fraction of the business. And so, for your company, I always thought it was kind of an opportunity. It's almost like a public VC investment, right? You're coming in a little earlier, but the valuation kind of reflects that. And if you guys get it right and you have a very experienced team, there could be substantial upsides. I don't know if that's kind of the way you view it, or that's just been my take on it.
Look, I think that's a very interesting analogy. I think companies like Coinbase have done an incredible job. They've focused somewhat on a specific segment, done it very well, grabbed market share, and done a great job. Some of our businesses are early, as you say, they look almost VC-like, but I assure you they're backed by very experienced teams who know what they're doing. We've got every confidence in them. To me, the differentiator of the business really is about the ecosystem. I'm a firm believer that the whole that we have is much more valuable than the sum of the parts, because there's interconnectivity and there's inter-revenue generation between them. As I mentioned, when I do exchange traded physical products, I don't just collect the management fee from running that vehicle. And if I was another company, I would just collect that fee. Inside Eqonex, I can route that volume to the exchange. I can capture volumes that way through exchange business and those trading commissions. And of course, I can store the digital assets inside Digivault and monetize that and increase the assets under custody. I mean, that's just one of many ways that I think our ecosystem offers value to shareholders, but I firmly believe it offers value to clients as well, because you get that whole package from one trusted provider and stay within the ecosystem.
Absolutely. And the other critical thing, I think, which some investors, maybe don't appreciate, is that your company does well, I think, in almost, even if Bitcoin went to 30,000 again or something, I think your company benefits from the volatility of your segments versus just, like, look, if you take $1 million, you can buy a couple Bitcoin, but you're going to have that intent. If it goes to 30,000, obviously you've lost half your money if you don't, hold and it doesn't appreciate again. With your business, I feel like you benefit from almost various prices. If it goes to $1 million, if it goes to 20,000, I feel like your business is, kind of does well in all situations. So,
well, I would agree. Look, if you look at it from the exchange perspective, obviously, as Bitcoin comes, goes increasingly through hot phases, volumes would expect to pick up. On the other hand, days where Bitcoin really pulls back are often met with really frantic trading volumes. Some people unwinding positions, some people buying the dip. You can often get really good volume days on down days. Other parts of the business, I think, are sort of complementary almost to the volatility of Bitcoin. I mean, for example, the volatility of crypto still scares off some clients, but that to me speaks to the power of having an asset management unit that offers a much lower volatility product, but still lets people, dip their toes in a sort of crypto swimming pool without fully jumping in. So we accept that for people. I think we are capable of making money in a variety of different conditions. And I think right now, digital assets really are about crypto because crypto is so evolved. But I keep coming back to the point, think about the future when all the traditional securities or even real estate, home mortgage deed, whatever, all start to become transactable as digital assets or represented through blockchain. It's not just about crypto, it's about the changing nature of information. It's about blockchain and how we can store that and provide an ecosystem to be able to potentially transact all of those kind of assets.
Absolutely, completely agree. So the last question, it wouldn't be, a sort of crypto company without asking Bitcoin price predictions and Ethereum sort of views. Do you have any take on that, or what's sort of your view on, I guess, Bitcoin and price predictions, if you can comment on that?
It's a great question. My favorite answer to that is put your money in our fund and stop worrying about the direction of Bitcoin. It's an absolute return fund. We make money generally whether Bitcoin's gone up or down. I think there's so many interesting trading strategies in crypto. It's not just about going up or down. Look, our house view continues to be very bullish on Bitcoin, there's and Ethereum, and there's a whole bunch of economic reasons we think support that we could all spend a long time philosophizing about. I think trying to forecast short-term price changes is a very difficult question, to put it politely, but I think long-term fundamentals are very solid. The US obviously hasn't at this stage allowed the ETF with spot to go through, but if you gauge the amount of demand that came through on a futures-based ETF, it hit $1 billion in record time, right? There is so much pent-up demand to get exposure to digital assets out there, and that didn't vanish when a spot product didn't come along. It's either dry powder sitting on the sidelines waiting to buy, and it's a similar story across Europe. You talk to pension funds and others that are starting to want to dip their toes into the water. The amount of potential clients that want to get involved in this business that aren't involved yet, that there's so much demand sitting on the sidelines. I think it's very, very supportive to long-term growth in prices.
Absolutely. So again, just to summarize, where can people get additional information and want to learn more about your company and potentially investing or existing investors? What's the best way to do so?
I'll bring Christian back on. Look, we've got a website, which we think, of course, is informative and explains all through the different business areas. Christian is certainly available to talk to people. I love talking about my business, the investment products business. Christian, what do you think the easiest way to reach out to us?
Our website is group.eqonex.com, or you can reach out to myself at ir@eqonex.com as well.
Okay, perfect. Well, again, I think we're running a little short on time. We'll appreciate you presenting today, Shane, and attending our conference. And thank you, Christian, for organizing everything. And I look forward to see you at the next event and for continued updates.